Terrific.
Warren, you and Charlie have been critical of business schools in the past and what they teach. With respect to value investing in Super Investors of Graham and Doddsville, you featured the returns of many great investors with different backgrounds, work, and education, with the lesson being following the philosophy is the key. To be successful today, does it still just fall back to Chapter 8 of The Intelligent Investor? And what do you think of programs and designations such as CFA, CFP, etc., which purport high standards, yet rooted heavily into academia? And I'd like to challenge you to a round of bridge tomorrow.
What was the last part?
It is what we think about.
Yeah, business schools and all that.
Business schools and all that.
Yeah. And I didn't catch the last one.
They're better.
Oh, he's challenging me to a round of bridge. Okay. I went to 3 business schools, and at each I found a teacher or two. I went to one specifically to get a given teacher, but at each one of them I found a teacher or two that everybody got a lot out of. So we're not anti-business school here at all. We do think that the priesthood, say 30 years ago, for example, in terms of, or 40 years ago in terms of efficient market theory, they strayed pretty far, in our view, from the reality of investing. And I would rather have a person, if I could hire somebody among the top 5 graduates of number 1, 2, or 3 of the business schools, and my choice was somebody that was bright, but had Chapter 8 of The Intelligent Investor. Absolutely, it just was natural to them. They had it in their bones, basically. I take the person from Chapter 8. This is not, what we do is not a complicated business. It's got to be a disciplined business, but it does not require a super high IQ or anything of the sort. And there are a few fundamentals that are incredibly important, and you do have to understand accounting, and it helps to get out and talk to consumers and start thinking like a consumer in many ways in certain industries and all of that. But it just doesn't require advanced learning. And I certainly, I didn't want to go to college, so I don't know whether I would have done better or worse if I'd just quit after high school, and read the books I read and all of that. I think that if you run into a few great teachers and they really change the way you see the world to some degree, you're lucky, and you can find them in academia, and you can find them in ordinary life. And I've been extraordinarily lucky in having great teachers, including Charlie. I mean, Charlie's been a wonderful teacher. And, any place you can find somebody that gives you insights into things you didn't understand before, maybe makes you a better person than you would have been before, that's very lucky, and you want to make the most of it. If you can find it in academia, make the most of it. And if you can find it in the rest of your life, make the most of it. Charlie?
Well, when you found Ben Graham, he was unconventional, and he was very smart. And, of course, that was very attractive to you. And then when you found out it worked and you could make a lot of money while you're sitting on your ass, of course, you were an instant convert. And so...
It still appeals to me, actually.
But the world changed. Before he died, Ben Graham recognized that the exact way he sought undervalued companies wouldn't necessarily work for all times under all conditions. And that's certainly the way it worked for us. We gradually morphed into trying to buy the better companies when they were underpriced instead of the lousy companies when they were underpriced. And of course that worked pretty well for us. And Ben Graham, he outlived the game that he played personally most of the time. He lived to see most of it fade away. Just to find some company that's selling for 1/3 of its working capital, figure out it could easily be liquidated and distribute $3 for every dollar of market price. Lots of luck if you can find those in the present markets. And if you can find them, they're so small that Berkshire wouldn't find them in use anyway. So we've had to learn a different game, and that's a lesson for all the young people in the room. If you're going to live a long time, you have to keep learning.
Yeah.
What you formerly knew is never enough. So if you don't learn to constantly revise your earlier conclusions and get better ones. I always use the same metaphor. You're like a one-legged man in an ass-kicking contest.
Yeah. Now, if anybody has suggestions for another metaphor, send them to me. Graham, incidentally, one point, important point, Graham was not scalable. I mean, you could not do with really big money. And when I worked for Graham Newman Corp., here he was, the dean of all analysts, and, he was an intellect above all others around that time. But the investment fund was $6 million, and the partnership that worked in tandem with the investment company also had about $6 million in it. So we had $12 million we were working with. Now you can make adjustments for inflation, and everything, but it was just a tiny amount. It wasn't really scalable. And the truth is, Graham didn't care because he really wasn't interested in making a lot of money for himself. So it had no reason to want to find something that could go on and become larger and larger. And so the utility of Chapter 8 in terms of looking at stocks as a business is of enormous value. The utility of Chapter 20 about a margin of safety is of enormous value. But that's not complicated stuff.
I finally figured out why the teachers of corporate finance often teach a lot of stuff that's wrong. When I had some eye troubles very early in life, I consulted a very famous eye doctor, and I realized that his place of business was doing a totally obsolete cataract operation. They were still cutting with a knife after better procedures had been invented. And I said, why are you in a great medical school performing absolute obsolete operations? He said, Charlie, it's such a wonderful operation to teach. Well, that's what happens in corporate finance. They get these formulas, and it's a fine teaching experience. You give them the formula, you present the problem, they use the formula. You get a real feeling of worthwhile activity. Only one trouble, it's all balderdash.
Yeah, whenever you hear a theory described as elegant, watch out. Okay, Andrew.
This question, we got a couple like this one, comes from Lauren Taylor Wolf, she's managing partner at Impactive Capital. Lauren, you've recently said that one of the things that makes you optimistic about America is women entering the workforce and the, quote, doubling of the talent that's effectively employed in that workforce. When it comes to positions of leadership, however, women make up less than 21% of boards of S&P 500 companies and an even smaller 5% of the CEOs. What can Berkshire do, and what is Berkshire specifically doing as a major investor in many of these large companies to advance gender equality both at the board level and among senior leadership?
Yeah. Well, again, as I've pointed out in the past, one of my sisters is here, and I have two sisters that are absolutely as smart as I am, and they have better personalities as anybody that knows both of us, or all of us, can attest. And they didn't remotely have the same opportunities I had. You have this 1942 or New York Times, and women could be nurses or teachers or retail clerks or stenographers, and that actually worked enormously to my advantage when I was a kid in Omaha in the 30s, because I had way better teachers. Because that was a job open to women. I didn't have a single male teacher in grammar school, and Charlie didn't when he went to Dundee, I don't think either. And we had this huge talent pool that was being funneled into very few opportunities, and therefore we got better than we deserved in terms of a market system producing it. Our managers run their companies, but I've probably named, before we made this management change, I probably named only 6 or 7 CEOs in the last 5 or 6 years. We don't change that much, but I would say that half of them that I've named have been women, which is about what should turn out to be the case in terms of ability. Now, there is a certain pipeline problem, but that gets cured with time, and you can't use that forever as an excuse. And I feel very good about the decisions we've made for CEOs. I prefer all our CEOs to live forever. And one woman almost did that we hired. Mrs. B lived to be 104. She retired at 103. And that's a lesson to our other managers, that if you retire prematurely, no telling what will happen. But it is absolutely true. It does make me bullish. It makes me bullish on the human race, but it's certainly our country, because if you look at what happened, before the 19th Amendment and then after the 19th Amendment for a long time and continuing to this day, but it's that there's been significant improvement. I do feel more optimistic about the future because I think there will be more selection by merit rather than by gender or by race or by inheritance. I think that if you had a system where all businesses got passed on to the eldest son or something, I think that society would make a lot less progress than one that's merit-based. Charlie?
Well, we did live in a different age. There's an old saying that the past is a very strange country. People behave quite differently there. And it was just totally different. And it was ridiculous that I cannot remember. I had one or two male teachers in my high school, but almost none. And the world has really changed. And within Berkshire, I've never seen any overt discrimination anywhere on the grounds of gender.
There probably has been some, though. I mean,
I'm sure that we have our share of all the peculiarities of human nature.
Sure.
But generally, everything is always improved. Wouldn't you agree with that?
Yep. So.
And I think it'll keep improving.
Okay, Greg?
Warren, in this year's annual report, it was noted, much as it is every year, that payments of dividends by the company's insurance subsidiaries are restricted by insurance statutes and other regulations, with Berkshire's insurance operations currently allowed to declare up to $16 billion as ordinary dividends during 2018. My question here is, should we view this annual regulatory threshold for dividends as a benchmark for allowable share repurchases as well? And in the event that Berkshire wanted to buy back more stock than that or pay out even more as dividends, would there be an issue with you using capital from operations that aren't held by the insurance operations to return additional capital? With the side question here being, would the annual cash distribution from BNSF, which is held on National Indemnity's books, be excluded?
Yeah, we will obviously follow the rules of the states in which we're domiciled, and all the rules, of course, but basically it's the state of domestication in the insurance companies, and they do restrict the amount of dividends in any given year, although you could, if you wanted to, request some additional amount, but we don't ever consider that. But repurchases, if repurchases were really attractive, we would do it in a very big way. And, I wouldn't rule. There's all kinds of ways that we could arrange things to do either a very large acquisition, which is what I would, or a very large repurchase, which I don't think is probably in the cards, just because of the way our stock trades, not because we wouldn't like it at a large discount. So Charlie and I, we've got the appetite, and we've got a lot of cash, but we could have a lot more cash. We could make any deal of even one of a very large size. We could make anything that came along. We could work out how to get it done. We would have, we're not going to be doing this, but we would have partners who would come in and give us a preferential part of a partnership. That's not going to happen in all probability, but there's a lot of things that we could do. So don't rule out anything based on statutory limitations of distributions from insurance companies.
And we could get a special permissions fee.
Oh, we can get
Declare bigger dividends. We are not. You should not assume that we're constrained by the laws of nature to the amount that we could take out under the statutes now.
Okay,